Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, I will be looking at setups today in underlying assets like ES futures, NQ futures, or several stocks, Apple and Tesla. Those setups can be taken any number of ways, with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat and YouTube for your questions and comments. And Hector, good afternoon to you as well. Glad you're here. My agenda for today: I want to go over news items just to wrap up the week. There's a little bit of economic data this morning. Then I'll go over my positional analysis, my planning for the day. Then I'll review a few setups, and then we'll take a look at the live market. So when we get to the live market, if anyone has any stocks or anything that you want me to take a look at, just let me know. All right, so for today there was some economic data, as I mentioned. The PMI data came out. It looks like both services PMI and manufacturing PMI came out at 9:45 a.m. Eastern Time. Services PMI was greater than expected, greater than 50, and manufacturing PMI was less than expected and less than 50. So not necessarily much of an impact on the market. And the next thing that I want to mention is a shameless plug here for the Spotgamma mini boot camp, and I will be presenting two case studies for NVIDIA and Google, and Brent Kachuba, the founder of Spotgamma, will be speaking as well. So this is 2 hours next Wednesday, June 28th, 10 a.m. to 12 p.m. I posted the link in Discord if you're interested in registering. Okay, so let's get started. Let's take a look at some charts now. Go to our positional analysis. I'm going to start with the S&P 500. This is the S&P 500 futures. And oops, I forgot to clean up that chart. Give me just a moment. All right, so this is the S&P 500, and before I take a closer look at this chart, I want to take a look at a larger time frame. So this is the SPX in a Thinkorswim chart, 30-day, 1-hour chart, and currently SPX, really this looks like it broke out of the downtrend last week after the Friday expiration. which makes sense. And I've talked about that earlier in the week. After a call gamma squeeze up into the June expiration, a lot of that call gamma came off, and the SPX has traded lower since then. And again, that is just fitting in with the pattern of a positive gamma environment that I've talked about before that has happened the last couple of expirations. All right, so let me point out some levels on this chart. First of all, the lower and upper edge of the weekly expected move, shown with the dashed purple line. So there's the lower weekly expected move. And now it looks like SPX is trading above that level. It was trading lower earlier today as well as yesterday. And then here's the upper weekly expected move. So a big contrast from last week. Remember that SPX traded well above its upper weekly expected move. And those moves come from the options market. And then the dashed blue lines are showing the lower and upper daily expected move. And note that SPX did trade below that level at 43.60, 43.61, and now appears to be trading above that level. There are some spot gamma levels on this chart. These are key gamma levels. First of all, here's the put wall at 4,000. That's the strike with the largest net negative gamma that can be expected to act as support, and that is well out of play, and it is that put wall has been at 4,000 for quite a while. The next level is the volatility trigger at 43.05. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they need to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that level did shift lower from yesterday. Yesterday it was at 43.55, and today it has now moved down to 43.05. And the next level is the 4400. That is the absolute gamma strike, and that is also the new call wall. So the call wall in SPX shifted down from 4,500 yesterday to 4,400 today. So that is a bearish signal, indicating the potential ceiling for price movement has dropped down 100 points for SPX. And the call wall is the strike with the largest net positive gamma, and that can be expected to act as resistance. So again, the ceiling, potential ceiling for price, resistance level, has moved lower, and that pretty closely coincides with the SPY 440 call wall. All right, so those are the levels that are in play for today, are in play in range of this 30-day 1-hour chart. Let's take a look at a shorter time frame just to see the levels, SPX levels for today. So this is SPX for today. Note that the SPX is now trading above the lower weekly expected move and the lower daily expected move, which did, the lower weekly expected move did act as resistance earlier today, and now price has broken above that level. So those are the primary levels in play today. Let me point out one other level. So here's the volatility trigger at 43.05. Again, SPX trading above that level. And this is an important strike here. This is the short call strike of the JP Morgan collar that expires at the end of June. That is the strike that comes with the June quarterly hedge that this certain JP Morgan fund puts on. So this is the again, the short call strike 43.20, and this strike has often been a magnet for price. If price gets close enough, the gamma will increase as expiration approaches and price approaches that level. It becomes closer to the money. So that is a potential target if price does move down below. All right, let's take a look at Bookmap now. So Bookmap, I have my cloud notes here, and I have SPX levels. So there's the 4350 level, SPX 4350, that was expected to act as support. That was noted as support in the Spotgamma AM Founders Note today. I also have SPY levels, and there's often reaction at SPY levels. So note this 434 price in the, actually let's zoom just a little bit here, scrunch this down. So just around this SPY 433 level did act as support for this now move higher, and then the 434 SPY 434 volatility trigger did act as resistance. And note that level for SPY also shifted lower from yesterday. It was 437 yesterday, so the SPY volatility trigger did shift lower. And it again acted as resistance earlier today, and now price is trading above that level. And then the next SPY level in play is the 435 absolute gamma strike. So that has been the price target for this move, one of the price targets for the move up that started around 11:30, and we'll talk about setups in a few minutes. So that was a key price target for the move higher. All right, so I've talked about shifts in levels for SPX and SPY. The volatility triggers did shift lower, and for SPX, the call wall shifted lower from 4,500 to 4,400. All right, let's take a look at NASDAQ. All right, so NASDAQ, a pretty similar chart pattern, move up, down, trading range in the morning, and then broke out starting around 11:30. Let's take a look at a QQQ chart, and we can take a look at the levels in play. So first of all, the put wall down here below at 355, and then here's the volatility trigger at 363, and note that did act as resistance a couple of times today, and now price is finally broken out above that level. And then the QQQ 361 level did act as support earlier today. Go back to Bookmap in Q. So here is the QQQ 361 level in my cloud notes, the 363 volatility trigger, and I also have the NQ lower daily expected move. So at the open NQ was trading below that level and chopped around below that level, and then now is trading higher. And then the next QQQ level up above is the 365 level, and that is the absolute gamma strike for QQQ. And note that level did move higher from yesterday. It was 360 yesterday and moved up to 365. And for QQQ, the volatility trigger did shift lower 1 point from 364 to 363 today. All right, so Cole asked, the lower expected move calculation comes from Spotgamma or somewhere else. So it comes from somewhere else. I just get it from an options chain. So I look at the close. Let me show SPX, for example. Let's take a look at SPX. Looking at options chain. No, I just look at the options chain. So this is the at the close yesterday. I looked at the this number for the next day. I'm looking over here. So for Monday, I will look at, let me open this up so we can see the right number. Don't need so many there. So I apologize if this is difficult to see. I've got a lot of kind of a high resolution screen here with Thinkorswim. So what I'm looking at is this number over here. So this is the expected move. And then I'll wait till the end of the day today when SPX closes, and I'll take the closing price and then take this number here, plus or minus, and subtract it and add it to the closing price to get the lower and upper daily expected move. And then you can do the same thing for the week. So this would be the here the June 30th. Here it is. So this right here. All right, so SP says, can you stream at higher resolution? Can't see anything on 720p. I'm sorry about that. There's nothing I can do about the resolution in YouTube. That's what I'm seeing too. But if you want to see my stream in higher resolution, I'm streaming in 1080p on Discord. So feel free to join us in Bookmap Discord. It's free whether you have a Bookmap subscription or not. Free for all. So I am streaming in 1080p in Discord, but this is all I can do in YouTube. All right, Second Winds ask about dark pool orders. That's not something that I look at. Maybe I should, but that's not something that I look at. All right, so Noah says he casts the stream to his TV and he's able to see everything. All right, so that's one idea. You know, I know some people that present do show on a lower resolution screen. Maybe that would help. This is what I'm doing, so I haven't had any complaints in Discord. All right, so this is how I get the daily and weekly expected moves just from an options chain. And there are many other ways of doing that if you want to calculate it by hand. That's just the quick and easy way that I do it. All right, so back to NASDAQ. I've talked about the levels in play for today. The QQQ 361 level support and the 363 volatility trigger was resistance earlier today. Price has broken out above that and has traded up toward the 365 365 absolute gamma strike. And again, shifts in levels, QQQ volatility trigger lower, and absolute gamma strike higher. All right, Hector asks, one of the levels contained on the charts represents the strongest retail. In such case, how many days or weeks take into consideration? Sorry, I don't understand your question. All right, so Cole asked another question. Do you prefer long calls, stock once a put wall is breached, knowing that it might bounce, assuming the hero lines, positive gamma starts coming in? So yeah, well, we will look at, we can look at AMD today. But I generally prefer to trade shares versus calls, but that's just me. Certainly, if you want to trade calls, that is perfectly valid. You know, long calls, long puts, and there are advantages and disadvantages to each. The thing about buying an option, there's no need to worry about a stop loss order. You buy it and wait for it to play out. So you have a defined risk trade. All right, so let's take a look at the some additional information that I use in my preparation. I'm going to take a look at the quick look at the Vanna model. So this shows how market makers are positioned at the beginning of the day. What this chart is showing is market makers' delta exposure in the vertical axis and how that changes with changes in price shown on the horizontal axis. There are two curves on this chart. The first is showing how market makers' delta notional changes with changes in price only. So what this curve is showing is market makers, as price increases, market makers' delta notional will increase, and they will have to sell futures to hedge their delta exposure, and that tends to subdue volatility. And then the purple curve adds implied volatility to the equation. So that is showing us how market makers' delta notional changes with changes in price and implied volatility. And that change in delta with the change in implied volatility is the Vanna effect. So this is showing as price increases, market makers will have slightly less delta notional hedge as predicted by the delta only curve. On the other hand, as price decreases, they will have significantly more delta to hedge. So as price decreases, they will have to sell futures to hedge their delta exposure. So the left side of this curve is typical of a negative gamma environment, and the right side is typical of a positive gamma environment. All right, let's see where SPX is trading right now. And I've got about 43.63. So that's around here. So what this is showing is if price increases, there will be a slight tailwind to price. Market makers can buy back their short hedges. So this is a slight tailwind, and at a certain point it will become a headwind. On the other hand, if price decreases from that level, market makers will need to sell futures to hedge their delta exposure. So remember, they always want to remain delta neutral. All right, let's just take a quick look. So gamma notional for SPX is positive. And let's take a quick look at SPY. So gamma notional for SPY is negative, and this curve is more typical of a This curve is more typical of a negative gamma environment. So Kevin, I'm sorry. I'm trying to present this as clearly as possible. I talk about this every day. If I suggest you do some background work if what I'm saying does not make sense. But I'm showing how market makers are positioned in the gamma curve, how they can be expected to react as price and implied volatility change during the day, and this helps me develop a thesis for the day. So Spotgamma provides plenty of information on their website, free for everyone, whether you have a subscription or not. Also a YouTube channel with a number of great videos. So if you want to see more background information, there's your resource. All right, so this is SPY, more of a negative gamma curve, as well as QQQ, also negative gamma. All right, let's take a look at the final part of my preparation. I'm looking at gamma notional. Again, I want to know how market makers are positioned on the gamma curve. I'm looking at gamma notional for SPX, SPY, NDX, and QQQ. Note all these numbers did increase from yesterday. So gamma notional for SPX became more positive. Gamma notional for SPY became less negative. And then for QQQ also less negative. So that's how market makers are positioned at the beginning of the day. And just as an example, for SPX, when market makers' position on the gamma curve is negative, that means, or positive, that means they are in the region where they are long calls. So for an index, Spotgamma assumes that traders are short puts, long puts, short calls, long puts, short calls. So they sell the calls to buy their puts. And then market makers have the opposite side of that. So market makers are short puts, long calls, and in the long call region, they are positive gamma. So again, they have to trade against price. So as price increases, they have to sell futures. They want to remain delta neutral. All right, so that is that's what I looked at to begin the day, and I was really looking for more of a range day based on the positive gamma environment for SPX. All right, so let's take a look at some setups now. We'll review some setups. First of all, let's go to the S&P 500. And again, a choppy session of the morning. I thought overall order flow was fairly bearish. Let's take a look at HERO first. This is hedging impact real-time options. What this chart is showing is price with a white line for SPX, and then the hedging flow, options trades and hedging flow for a combined signal, SPX, SPY, XSP, and ES. So combining options trades and market maker hedging flow for all those instruments into one signal for SPX. And so far today, this is net negative. This notional value is about minus 2 billion negative. So overall, traders are taking negative delta positions. I'm looking at this number right here, minus 2 billion notional value. All right, let's take a quick look at the individual components of this. So first of all, SPX, definitely positive, pretty strong correlation with price action. SPY, negative. negative 1.2 billion, and E is futures, also negative for the day at minus 1.6 billion, and it nets out to a little over minus 2 billion. All right, let's take a closer look at this chart. I'm going to go to the morning session. All right, so this really set up, or really kind of confirmed a long setup, not really clear, and then a short that was a lot more clear. Really, with Hero dropping lower, made it a slight move up, then drop lower again. And let's take a look at the chart now. So that was a long around 945, right here, and then a short around 1045. So let's go take a quick look at Bookmap. We'll zoom in. Zoom in on the morning session. So Freddie asks, what platform is that? So if you're talking about the platform that I'm showing right now, this is Bookmap. And then the website that I was showing is Spotgamma Hero. All right, so this is Bookmap. Here's the long setup in the morning, and really the clue here, other than the slightly bullish hedging flow shown with Hero, was the iceberg orders. And that's shown here by iceberg orders, also shown by this rising light blue line. And then finally, after the move starts, higher, confirmed by rising cumulative volume delta, with the price target at the 434 volatility trigger. And note here that there were traders above that level. These limit sell orders shown in the Bookmap heat map, right there, looking to sell somewhere between the 43.97 level and the 4,400 level. And they got their fill and price moved lower. Again, remember that at 10:45 we were looking for a short as Hero started to move lower. So there was the short at the SPY 434 level, which was right at the ES 43.97 level. All right, let's take a look. And then the long setup around 11:30. And the clue in the order flow was definitely iceberg orders again. These are orders that larger traders use to hide their size. And you can see the rising light blue line again as larger traders start buying the move lower, and then price reverses higher at the SPY 433 level. So now price is traded up again. I mentioned the SPY 435 level, the absolute gamma strike, and looks like that level has acted as resistance. All right, so Cole asked, is there a trick to bringing in the cloud notes from Spotgamma into Bookmap for ES, NDX, Russell? They don't seem to line up with the actual levels in Bookmap. All right, so for ES, let me just talk about ES. The Spotgamma levels are for SPX, and there is a pretty big difference between ES and SPX prices. And I calculated that today. At 41 points. So I'm showing my, here's the Spotgamma cloud notes in this column. So these are directly from Spotgamma. Right now Spotgamma is using a 47-point difference between ES and SPX, and I calculated that difference today at 41 points. So I have the same level. So that's at the 43.73 level that Spotgamma is showing there. And here is my level for the 43.74. So this is why I use my own cloud notes. So I can calculate that difference every day. Spotgamma sometimes does not update it. So I just use my own cloud notes to have show those levels more accurately. So right now, notice that this is showing SPX right at 43.60. So let's take a look at the SPX chart. So here's the current price right now at 43.59.5. So just a little bit below 43.60. All right, so my levels are closer to the actual level. So I have a script in, well, you can actually just put this in the easy way if you have Thinkorswim. In Thinkorswim, you can just create this directly on a watch list. So this is /ES minus SPX. Right now it's showing 41.5 as the difference. And it changes. This is showing it in real time. So somewhere between 41 and 42 is the actual level, the ES minus SPX difference. So I just use 41 today. All right, so Cole, hope that helps. All right, so Hector asks, in order to anticipate the direction of the open on ES, do you think Spotgamma levels could help to anticipate possible supported resistance levels? Well, yes, so the Spotgamma levels are set once a day at the beginning of the day before the open. So yeah, I'm anticipating those levels as potential support and resistance. They're not going to give me any indication of direction of the open. All right, so Cole says he will create his own cloud notes, and I actually use an add-on that's available. If you have Bookmap, it's available in the Bookmap marketplace. So I fill out all these levels in a spreadsheet, and then Pricelines displays the notes here and also draws the horizontal lines. I like to see the horizontal lines on my chart. So the Pricelines, if you have Bookmap, it's an add-on available in the Bookmap marketplace. And that way I can add in the SPY levels, daily expected move, weekly expected move, whatever I want. So it's an add-on, yeah, available in the Bookmap marketplace. And I think it's incredibly useful. All right, if you have Bookmap Global or Global Plus, you can definitely use that add-on. All right, so that's setups for ES, long, short, long. And let's go take a look at NASDAQ real quick. And let's take a look at, let's go out to the bigger picture view here. So this is the reversal at 11:30, initially supported by options traders. Note the rise in Hero with a rise in price, slight lead effect there, and then they start to fade that move pretty quickly. And now they're fading the move again. Well, let's take a look at NASDAQ. NASDAQ. And there's today for NASDAQ a much stronger correlation between market maker hedging flow and price action, and mostly bullish. And this is a combined signal for NDX and QQQ. So note the move lower. First thing in the morning is short, and then options traders came in and started buying, taking positive delta positions. Price moved up, then they stopped, price chopped around, and price started to move higher as they started taking positive delta positions again. All right, so really there are two key long setups. The first at 9:50 and the next at 11:30. We'll take a quick look at Bookmap. Let's see how to look at this quickly. So here was the first long setup. Reversal higher at the 361 level, the QQQ 361. And then the second long setup. Here, note the shift in order flow, aggressive sellers, price reverses higher just above the 1500 level. Aggressive buyers come in and move the price up toward the QQQ 365 level, also the NQ 150 level. And remember, there was much more of a confirmation support from options traders for the NASDAQ. All right, let's take a look at some stocks, and then let's get to the live market. So the first stock I want to take a look at is Apple. Apple, nice strong uptrend today. 185 is the key gamma strike, and note price reversed higher at that level. So there's 185, the key gamma strike. Let's take a look at Hero for Apple. So traders are buying calls and selling puts. Notional value for the blue line puts, orange line calls, both positive. So they're taking positive delta positions, confirming the move higher at the 185 key gamma strike. All right, the next, there was a request to look at AMD, a mention of AMD. So AMD reversed higher, actually reversed lower first at the 110 hedge wall key gamma strike, and then traded below the put wall and is now moving higher. And this moves higher, lower, and higher, all confirmed by hedging flow. All right, let's take a look at Hero for AMD. I mean Bookmap, I'm sorry. Bookmap, AMD. So here's the reversal lower at the 110 level. Let's go back and take a look at Hero. All right, so we know that 110 is the hedge wall, the key gamma strike, 109 the put wall, so AMD did trade lower. And is now trading above the put wall and the key gamma strike. All right, so I'm sorry, I don't know how to pronounce your name. Trivedi, muted Trivedi. Sorry, I can't really recommend any books. If you're looking for a book about the information that I'm showing, I really don't know of any. This is a new way of looking at the market. There may be a book available called Positional Analysis or Position Analysis. I have not read it. So sorry, I can't recommend any books. I recommend, if you're interested in learning more about what I'm doing, go to the Bookmap website and the Spotgamma website. And you're just going to have to read through the information on those websites. And Cole asked, and I'm glad you're here. He says, recently Bookmap got launched in his country, excited to join the ship. Again, glad you're here, excited, glad you're watching my webinar. And Cole asked, does it always bounce off the put wall? And the answer is no. So it depends on what you're looking at. I think the put wall, call wall levels are work more often for index products, especially the SPX, than they do for single stocks. So anytime I expect or looking for a reversal at a call wall, put wall, wall level, I always want to confirm that with order flow in Bookmap and hedging flow in Hero. And Cole asks, is there a way to predict direction of tech stocks with key gamma strike, call wall, put wall? So with just the levels, I don't think there's any way to predict direction. Looking at a one-day view of the levels. Again, you're expecting reactions at those levels. If you're looking for a way to predict direction, first of all, there are a couple of ways. Or anticipate direction. Let's take a look at the Equity Hub for Spotgamma. And let's take a look at, and I have not looked at this today. And I used to show this more. I have not recently. Let me just take a look at, see if I can find an example. All right, for example, for AMD here, note that the key gamma strike has been shifting lower from 130 on 6:15 before expiration, and now it's shifted lower. I interpret that as bearish. So in your pre-market planning, if you're looking for stocks to trade, this is something that you can look at to anticipate direction. And also the last 3 days, actually if you go back to that same time frame, generally the put wall has been dropping lower. Now the call wall, the ceiling, remains the same at 130, but the floor and the key gamma strike have been dropping lower. So if you want to use these key gamma strike, call wall, put wall to plan, anticipate moves for a stock, this is what you want to look at. And then during the day, like I say in my introduction, I'm confirming. So I develop a thesis here. Based on this information, I would develop a bearish thesis for AMD. And then, as I say in my introduction, I confirm my thesis with order flow and Bookmap and hedging flow and Spotgamma Hero. Again, confirming my thesis and for setups. So let's go back to AMD. So there's Hero. Again, this confirming a short setup in the morning here. The reversal at the 110 key gamma strike as traders were taking negative delta positions. And let's go to Bookmap again, AMD. So now this is, with everything else, seems to have resolved higher, but in the morning, was a nice short. Making a series of lower highs. All right, so Cole, that's how I would approach a single stock. It's often much simpler than the S&P 500 or NASDAQ. All right, let me take a look at a question in Discord. Sampan asked, if price increases, market makers delta notional. So looking at the Vanna model for SPX, and you just can't I don't know why that's not clearing up. We'll go to Meta. All right, so let's go back to the Vanna model. This is for Sampan's question. So the Vanna model, let's go to SPX. So let's say price is trading around 44.15, 44.20, something like that. So the Vanna model is showing that in that case, market makers delta notional will be increasing. So you have to look at this Vanna model to understand that, and they want to remain delta neutral. So their delta notional increases as their delta notional increases, they have to sell futures to hedge their delta exposure. And then on the other hand, so if price from here, from this same point, if price decreases, market makers delta notional will increase and they'll have to sell futures. So in this case, in the left side of the chart, they're trading with price. Again, it doesn't matter to them, but they're just hedging their delta notional. So in this example, If price decreases, market makers' delta notional will increase. But if price is over here, let's say right around here, and price decreases, they will be trading against price. So they're selling futures as price moves up. As price starts to move down in this positive gamma region, they will be selling futures. So Sampan, it depends. So it depends on their, where price is on their gamma curve and what their position is. So just study this chart and understand that market makers, again, want to remain delta neutral. So you can't make a blanket statement like that without looking at this, Vanna model. And Hector asked, by making the adjustment of points previously mentioned, those levels work for futures. All right, so I talk about the shifts in levels every day for the S&P 500 and NASDAQ. So I assume you're talking about what I was showing in AMD. We can look at the same thing in look at the same thing for let's go to let's take a look at SPX. So we can look at the same levels here for SPX, SPY, QQQ, and see shifts in levels. So here was the shift lower in the call wall today. And note for SPX, the shifts in levels are typically not as dramatic as they are in single stocks. So take a look at, let's say maybe look at a volatile stock like NVIDIA versus SPX. So the levels are shifting more from day to day in NVIDIA. And Red Panda asked, notice equity help list has info named put call OI ratio. What is that? Well, first of all, I would suggest if you have any questions about specific Spotgamma data, just go to their free resources, their support center. They provide definitions for everything. But OI is open interest. All right, let's see. So this is although I don't show this in my planning process, I actually for SPX, SPY, NDX, and QQQ, I take these levels and I mark them down by hand in a notebook every day, and then I'm just flipping the page, comparing from day to day. So that's how I know for SPX, just at a quick glance, the volatility trigger shifted lower and the call wall shifted lower. So I can just flip back to yesterday, the day before, whenever. So that's information is available here or in that table form in Equity Hub. All right, let me take a look at questions in YouTube. All right, so Cole asked, do I need only 2 of 3 to move? The more the better. So yeah, 3 moving lower would definitely be bearish. So I'm looking at the day-to-day movements as well as the trend lower. So that was definitely bearish for AMD, and I think AMD has been, that shows that traders are looking for lower prices. They're accepting lower prices, and I think AMD has been moving down for several days now. All right, so again, I'm not sure I can pronounce your name. Muted Trividi. Yeah, it takes a while. He says he came here for first time a couple of weeks ago, understood less than 5%, and now he's understanding more and more. So yes, it just takes time. He says thank you for such precious knowledge sharing, and you're very welcome. Again, I'm very glad you're here. Glad you're learning. Glad you find this helpful. Again, thanks for posting. All right, let's take a quick look at a couple of other setups, and then we'll take a quick glance at the live market and call it a day. My time is already up. So we can see that price is now turned around for AMD. Let's take a look at Meta. Strong uptrend all day. Note the 290 call wall in place, so price is trading above the 285 key gamma strike and has been trading up toward the call wall at 290, and that level, note how I'm out of time, so I'm not going to zoom in on this. Note how Hero has started dropping lower and price is responding. And let's see that what traders are doing. They're definitely buying calls. Note the notional value of the orange line, 153 million versus the put line. They're also selling puts at positive 15.6 million. So they are buying calls aggressively. That's driving price. And then they have also been selling puts in Meta, driving price higher. So very clear correlation between options trades, hedging flow, and price action in Meta. And let's go take a look at Meta. So there it is. Remember, 285 is the key gamma strike. Price moved quickly through that, and now was heading toward the 290 call wall. As traders started either taking profits or at any rate they were taking negative delta positions, and price started to move lower. And another question in YouTube, Bookmap uses 5 depth level to data feed. So in Bookmap, I'm using DX feed data for stocks, and that provides full depth of market. So for stocks, notice here Meta, DX feed, that's what I use for all stocks. That provides full depth of market. And I'm looking at the current order book here for Meta. Current order book. This is showing the limit buy and sell orders. And there are orders in the order book as far as you want to see. Both limit buy orders and limit sell orders. Just look at all the numbers here. So that's full depth of market. Again, there are orders in the order book. Again, as far as you want to see. And the same for futures. For futures, I use rhythmic data. And this is what most Bookmap users use. DX feed data for stocks and rhythmic data for futures. And again, rhythmic provides full depth of market. Again, I'm looking at the current order book. All right, so I hope that answers your question. All right, Cole says, I see you use the iceberg stops on Bookmap. You seem to use those in tandem with levels. Are they a pretty good tell of direction since you've been watching them in indexes, names index? So first of all, stops and icebergs are that's MBO, market by order data. That's for CME futures only. So I'm seeing stops and icebergs for ES and NQ only. And this is data that, again, for CME futures, Rhythmic is the only data provider that I know of that will that provides this data. And Bookmap uses this data, and I have both the iceberg and stops subchart indicators that's shown down below. So this blue line here, that's a cumulative or a sum view of the icebergs for the day, and note that is positive. And then the stops are shown with the yellow line, and that you can choose any color you want. This is what I choose, and I also choose the mode to show this data in the subchart as cumulative. And then there's also an ARN chart indicator for stops and icebergs. So notice here that there's kind of, well, first of all, right here, as price started to move below the 435 absolute gamma strike, there was a large iceberg order that came in, or actually 675 contracts in 5 transactions, and that was a good signal to go short here. And you can see just the all the pink volume dots coming in. So a shift in order flow there as price reaches an anticipated resistance level. So I'm looking at for S&P 500 futures, it is complex. I'm looking at a lot of stuff. I'm looking in Bookmap, I'm looking at order flow, the buy sell orders shown by these volume dots. I'm looking at and that is confirmed by CVD here. And note this shift lower in CVD right as price hits that anticipated resistance level. So that is the next thing I'm looking at, levels. And that's why I have all these levels on my chart. They're very important to me, helping me frame my trades for the day. And then I'm also looking at hedging flow. We've watched Hero, watched the options hedging flow. We've seen that it is for the S&P 500 definitely has been bearish today. Negative delta. So I'm looking at a lot of things. I'm combining order flow in Bookmap with stops and icebergs, and then levels. And the levels are based on round numbers and gamma levels, as well as expected moves. So basically my levels are based on round numbers and options information. And then finally I'm looking at hedging flow. All right, and Dildex asks, is this work on crypto trading? So some of what I'm showing does definitely work for crypto. And Bookmap, I don't trade crypto, but Bookmap will help you extensively with crypto. And there are other presenters that talk specifically about crypto. I think there is trader that comes on every morning. I believe it may be around 8:30 a.m. Eastern time, and he shows how to use Bookmap for crypto trading. And then there's another presenter that comes on. I think he may be just once a week around 1 p.m. Eastern time. So I don't trade crypto, and I don't think what I look at, what I'm doing based on the options market, I don't think that is there's any information using options that would help with crypto. So I trade again pretty much these instruments shown on my Bookmap chart, and trading futures, shares of stock, or options. I'm just again looking at the underlying assets here. All right, so I hope that helps. Bookmap is great for crypto. It's just not what I do. And Sampan asks, for SPX, will it need DX feed or rhythmic? And sorry, for SPX, you can't show that in Bookmap. You can't trade SPX directly. It's just an index. So you can trade options in SPX, but there is no way, there's no actual transactions in SPX to show in Bookmap. So you can show ES, which is a derivative of SPX, and you can also show SPY. So I've got SPY and ES, but again, there's no SPX. So a lot of the hedging flow for an ES is based on options trades in SPX. You just can't see that actual SPX index in Bookmap. And there's another question in YouTube. Muted Trividi again. Sorry, I'm butchering your name, I'm sure. Yes, that's not something that I do. There are 3 examples of APIs here that are included with Bookmap. This chase, escape, and execute. I think you can write others. If you join us here in Bookmap Discord, there are a couple of rooms for API. There's a API room, and then there's a Python API room. And I'm sure traders, I don't often look at those rooms, but I'm sure that traders discuss add-ons, and Bookmap uses those APIs to write their add-ons as well. So, and these are algos, I think: chase, escape, and execute. Not something I use, but it is available, and if you write code, I'm sure you can write your own. All right, and then Sampan asks also, icebergs, sell buy stops for ES can help trade SPY. Definitely, yes. So when I trade SPY, I look at the ES chart. There's so much more information on the ES chart, and that's one reason I have these SPY levels on my chart. So that is definitely an alternative way to trade the S&P 500. If you just mark the SPY levels on your chart, and so you can see that these SPY levels are almost always in play for the S&P 500. So just mark the round numbers on your chart. So there's the SPY 434 that acted as resistance, SPY 433 that acted as support, and then again the SPY 435 acted as resistance. It was a price target and resistance. So if I'm trading SPY, which is a pretty good idea, you can adjust your size however you want. Don't set, trade smaller, set wider stops, or trade SPY options. So let's just take a look at SPY. So there you go. Support at SPY 433. Resistance at the 434. Then a break above the 434. And there's the resistance at the 435. And as I've been talking, prices drop pretty quickly back down to the 433 level. Let's go back to ES and let's see if we can get any additional clues about what's going to happen at that level. And no, not really. We know that was support before. There was a sell stop run into that level, shown by this red dot here. Note the falling yellow line and a small iceberg buy. All right, so Sampan, again, a great idea. Watch ES if you want to trade SPY. All right, so Raid Trader asked around 11:15 a.m. PST, there was a huge 700 plus contract wall of liquidity at 4,000 that immediately pulled as it swept through. Or was that an example of spoofing or rug pull? So that is not something that I typically think about or look at. I suggest you join Bruce at Monday, Tuesday, and Friday at 10 a.m. Eastern Time. And he is the expert on that type of activity. So I'm sorry, that is not my area of expertise. I've talked about my area of expertise. That is his. So I suggest you can ask him that question. All right, my time is I've gone almost 20 minutes over. I've got to wrap it up today. I want to thank everyone for your questions. It's been a great interactive session. Having all these questions, I really appreciate it. This is I'd like to see this every day, this level of interactivity. Again, it's great. Thank you very much for watching. Thanks for your questions and comments. Have a great weekend, and I will see you on Monday. Bye.